Okay.
Hi, welcome to the Elder Talker Show. I'm DV LeBron. Today, my very special guest is the money coach, Mr. Mike Mendoza. How you doing, sir?
Great. Doing great. Good to see you.
So, people do not prepare for a lot of things in life. I mean, things that can happen, things that we just don't prepare for, like deaths and unexpected deaths and different coverages and different things that we could do financially to prepare our family. So, I wanted to have Mike on to kind of talk about money, something that is not a subject a lot of people like to talk about, but should. Mike, thank you so much for coming on the show.
Well, I'm really thankful to be here.
I'd like for you to kind of talk to the audience and tell them about your, about you.
Okay, great. Well, I've been coaching people on money for now over 30 years. And nothing has changed in 30 years. I mean, we say it's getting better, it's getting worse. It's the same. Unfortunately, 78% of the working population is living paycheck to paycheck. We're never taught about money in school. It's not part of the curriculum. We're just supposed to figure it out on our own. And as a result of that, if no one's ever taught anyone or instructed them, or if people didn't come from a wealthy family, the discussions never take place. So we find people today in debt up to their eyeballs. We find people not saving and planning for the future. They're living for the moment. And it's just simply because no one's ever had a discussion about this, cause people to have a behavior change. And it's hard if you've already gotten way into life and you've been living paycheck to paycheck for so long. You start to then wonder, okay, what's going to happen when I need to retire? What's going to happen later on in life? And another thing that people never have a discussion on is, what if I drop dead tomorrow? Will my family be okay? I mean, there's so many things that need to be discussed, everything from emergency funds to short-term funds to long-term funds, how to manage and eliminate debt completely, because debt's like having financial cancer. And quite honestly, no one wants to have the life insurance discussion because it talks about death. So, but at the end of the day, one of two things are going to happen. We're either going to die too soon or we're going to live too long. And that's how it's going to play out. So people need education. They need financial literacy education. And I've committed my whole life for over the last 30 years to just educate people on the fundamentals of money.
Debt is at an all-time high, especially credit card debt, especially after the pandemic, and so a lot of people with this inflation, they're turning to their credit cards. They're having to cover shortfalls. Most people don't have, and I don't know the exact statistic, but most people cannot survive if they had to go out without their paycheck a month. They don't have a nest egg figured out. What is the number one mistake that you've seen in the last 30 years that people really set themselves up for failure doing?
I would say probably not saving money. When I work with somebody and counsel them on how to eliminate the debt, one of the first things that we do, as crazy as it may sound, is we may get them to stop paying on some of their debts. Yeah.
Go ahead.
Okay. So we want to get them to stop paying on some of their debts. And the reason that we do that is so that they could take that money and build an emergency fund. Because what happens if you decide, okay, I want to eliminate my debt, and you're working on eliminating the debt and you have no cash, emergency is going to come. So what's going to happen is you're going to flip back to those credit cards and use them because you don't have the cash that you need in order for you to deal with the emergency. So we got to build that emergency fund up. So there's a whole strategy that we teach people. One of the concepts is called debt stacking. But it's terrible what's happened. I mean, people got in a spending spree during the pandemic, no question about it. There wasn't a lot to do. They were getting money from the government. Then when that money stopped, people got used to that spending spree. So they kept spending. At the same time, then we end up with inflation. and then everything's going to cost more. And these are the people that are living paycheck to paycheck. So there's no more money, so they're using the credit cards. And then now to double slam people, interest rates go through the roof. So when they go through the roof, guess what happened? Credit card interest rates went through the roof. Now the average credit card interest rate that's out there is 21%. I have sat with people already up to this point that have had 54.9% interest rates on their credit card, and they didn't even know it. And I ask people, are you aware of what the maximum interest rate the banks can charge you on a credit card? And the answer is no. And that's when I let them know there is no maximum. They could charge whatever they want to charge. And the consumer has no chance of getting out of debt with playing against those rules. So they need to have a plan to eliminate it.
What is debt stacking?
Debt stacking is where we show people how to pay their debts off. So we literally run a program. We put in every debt that they have, and we list what the minimum payments are, what their actual payments that they're sending to the credit cards are, what the total balance is, and the interest rate. And through that computer system, we're able to then come back and say, okay, this is how you're going to pay your debt off. You're going to focus all on this one card. And as we pay that off, we're going to stack it and move it to the next one. When we pay that one, we're going to stack it and move it to the next one. Let me give you an example. I sat with a firefighter out in East Texas, and he had $109,000 in credit card debt. Didn't own a home, okay? And that was his debt situation. Based on his payment patterns, he was not going to be out of debt for over 100 years. Basically, he was going to die. He was never going to pay off his debt. So through the debt stacking program, using exactly the same money that he was allocating to debt right now, I was able to show him how to completely eliminate all of his debt in less than 6 years.
Wow.
It's powerful, but people don't know, or people don't want to sit down and talk about it because they could be embarrassed, or they could think their situation is hopeless. And that's not true.
Does the stigma of debt or of being in debt, does that stigma get in the way of people coming to see you? And when you see them, does it like completely bother them? Have you seen that a lot in 30 years?
It doesn't bother. Once they see me and they're willing to say, okay, please help me, then of course that isn't a problem. Okay. They'll move forward. They'll see the difference because I'll show them the befores and afters right on my computer. It's getting them to see me. It's getting out of the denial, or getting them to not believe that they're going to have to change their lifestyle. They want to go out to dinner on Friday or Saturday with a family. They want to keep doing the things they want to do. And I become the disruptor. And they don't want a disruptor. They don't want someone to come in and say, okay, you're going to have to change your lifestyle. You're going to have to eat at home all the time. You're going to have a budget. All of those are things that concern people. So they avoid it, and they keep kicking the can down the road, just like what's happening with the government right now in Social Security. They keep kicking the can down the road, even though we know that it's destined for failure unless some changes are made. Mike,
so when you get in there and you start digging, do you see a lot of I got no money, but Starbucks.
Yeah.
Starbucks.
Oh yeah.
You see a lot of that.
Oh yeah. The people always have money. Okay, they always do. It's just what they choose to do with their money, and a lot of it is mismanaged. And a lot of times it has nothing to do with our regular bills. It has to do with things like extras, like Starbucks, or eating out, or doing things that maybe really aren't that necessary. Or they're streaming, all these different channels onto their TV and not even using them all, or not paying attention to what they're paying for their cell phone bills. And there's so many things. So we actually go through a whole budget process. We want to see everything they're doing. We want to see their total behavior so that we can then come back and counsel.
Wow. And I bet you find a lot of stuff. Now, if somebody, and I was talking about this, if somebody went without a paycheck, they probably wouldn't survive because they're so tight. Now, imagine a situation where one of the principal money owner unfortunately passes away. What are some of the scenarios you're seeing there?
I've seen everything happen. I unfortunately have experienced death in a lot of scenarios. I've seen, the primary breadwinner die. I've seen the spouse die. I've seen kids die, which we never expect that to happen. But every single one of those scenarios turns into a financial catastrophe. A lot of times someone says, well, you know what, if I died, she'll have to figure it out, and it's like, well, no, it doesn't work that way. She's not going to figure it out, or she can marry someone else. Well, not necessarily that somebody else wants to come in and take care of your kids, So there's so many things there. Wouldn't you want if it's your spouse, wouldn't you want your spouse to be better off that she would never have to get married if she didn't do it? She had to do it for the money. Or the other way, what if something happened to your spouse? And even if she's not working, you say, well, she doesn't provide an income. Well, you go out there and see how much Mrs. Doubtfire costs to come into your house to come and take care of everything that she's not getting paid for. So those are all the scenarios that really have to be discussed and dealt with. And the other thing that happens, DV, believe it or not, is sometimes people go, well, I have stuff at work. Well, I know that people think they have a false sense of security, that it's good. And there are so many exclusions in group policies that someone can die and have insurance at work and still not get the claim paid. So it's just too much that people don't know. They don't always want to know. They want to feel they're okay, and they're not. They really aren't.
Talk to me about why they wouldn't pay you.
They wouldn't pay because in a group policy comes with exclusions. And a lot of life insurance policies, even non-group policies, have exclusions. I want to give you an example of an exclusion. 5 major carriers in New York that had insured in New York had exclusions. One of them was called a war exclusion. When 9/11 happened and the buildings were destroyed, a lot of people died. A lot of people had insurance with these major carriers, but in their policies, they had a war exclusion. As soon as the president said, this is an act of war, none of those insurance companies had to pay. That's an exclusion. People don't know this stuff. They don't think about it. They don't read anything. They just put it in a drawer. We all have that drawer where all the junk gets put in there and no one ever touches it. Well, that's what happens. Well, with a group policy at work, take that and add all kinds of exclusions into it, to where if it didn't happen while you were working or while you were on the job, here's a perfect example. Somebody gets sick. They go on disability. They are no longer working at their employer because they're on disability. They're not receiving a paycheck. Therefore, that policy suspends. Imagine someone gets sick, ends up with cancer, and ends up never coming back to work. 9 months, 10 months later, they die. Guess what? They don't have insurance because it's suspended until they come back to work. Those are exclusions. And people don't know this stuff, but it's really up to them to have the courage to say, hey, I got to meet with someone who can explain all of this to me.
Wow. And people assume that, once you die, your stuff goes straight to your family. Is that the case?
Well, not if you don't have any type of legal documents in place. So if you don't have a will, for example, a will is going to, at the very least, is going to be able to cause you, when you die, to not die intestate. Now, I'm not an attorney, but I do know that that's important. I think it's really critical that people understand there are 3 documents they should have at the very least, which is a will. They should have a durable power of attorney, and they should have a health perspective. And the reason those are so critical is because if we die and our spouse needs to get to a bank account that maybe her name isn't on or his name isn't on, you don't have access to that. And you can't. You do not have access.
Oh, not even if you're married. You're married for 20 years.
Even if you're married, no. Unless there was a beneficiary listed on that account or it was a joint account, you don't have any access.
Oh, wow.
So people don't understand this it's very simple stuff, and it's very easy to take care of so much stuff if people just had the conversation with someone who could help them with that. But dying intestate isn't good. And sometimes people need even more. Sometimes people need a living trust. So all of that is a discussion they need to have with an attorney to make sure those things are in place. We bring them up for discussion, but of course, we're going to refer them to a legal service.
Now, another thing, when you're tight and you don't have or you know, you're looking at it and you're like, oh my, I'm in debt to my eyeballs, or I have no money. How important is it for them to save for retirement? Because you know, people are not saving for retirement. They're assuming that Social Security will be there. So talk to me when you get a client in and you talking to somebody about this. How do you approach retirement when they have nothing?
Everybody has something. The challenge is we were never taught from the beginning how to handle our money. There's a simple principle. I heard it from a philosopher. His name is Jim Rohn. He's since passed away, but he taught a principle which is called 70, 10, 10, 10. And if kids were taught this in the beginning and people followed it, there would be no problems. Okay. So he said 70% of your money is what you actually consume and spend. 10% has to go back to the universe, whether you're giving to church or you're an atheist, you just got to give it back to the universe. It's a principle that works. Okay. 10% needs to be put aside for emergencies, and 10% needs to be used to build wealth. Now imagine that being followed by somebody when they get their first job and they kept doing it, and as their income went up, those percentages remained the same. And you know what? It's not the end game, because I know people today who don't do 70, 10, 10, 10. They actually do 10, 90, 0. So they only use 10% of their income. 90% is given away and they don't need to save anymore.
Wow.
So it just really, you have to learn that. You know who learns this stuff? The wealthy. The wealthy learn this stuff because their families wealthy. They're going to teach their kids the same thing. And that process continues because they were taught differently. But we're not all wealthy. We didn't grow up. I grew up poor. I grew up in the hood, man. And so I know exactly what was not taught to me. So coming in this business, when I first started, I said, this can't be that big of a problem. I found this is a problem no matter what the income level was. I talked to people that made $50,000 a year that had more wealth than some people that had 7-figure incomes. People making $1 million, $1.5 million. They were spending it all. And the one disciplined person at 50 grand a year had more money than they did.
Wow. Now, financial literacy isn't something that's taught. You know, especially when you are growing up in the hood, and or when you had a tough upbringing. Even some people that don't have, you know, or that don't have those disadvantages, don't get taught financial literacy. When you run into that, what is that biggest thing that you see where you know that this ain't being taught?
You know, the sad thing is that I know already that virtually 80% of the entire population lacks financial literacy and isn't doing what's right. And they're living paycheck to paycheck. They're not saving for retirement. And I already know that. So I could go in a room of 10 people, and I know in that room, there's at least 10 people that need help. There's no question about it. They may not want to have the discussion, but it's true. Let me give you an example. I go into a chamber function or some type of networking event, and I talk to people. I mean, we're both good at that, talking to people. And when I'm having the conversation and talking to people in the group, and or talking to people as individuals, and I was, what do you do for a living? And we have the whole conversation. They'll eventually come back and say, what do you do? And I say, well, I'm a money coach. And they go, what's that? And I say, well, I show people how to eliminate debt and save for their future. They say, 100% of the time, I need to talk to you. 100% of the time. It's happened for 30 years, 100% of the time. Now, does that mean they're going to talk to me? No, it doesn't mean they're going to talk to me. It just means that they know they should talk to me. Now, whether they do or don't, that's up to them, and I don't put any pressure. Listen, if you had cancer and you went to the doctor and the doctor says, this is how we're going to treat you, and you just leave and don't go back, is the doctor going to call you and say, hey, you're not coming in. You got to come in. You're going to die. No, the doctor's not going to call you. You're going to call the doctor. People are dying right now in their finances. They have financial cancer. They don't know it because you don't feel it necessarily. It's not there like you have a physical pain. But for some people, they do. There are some people, they do have a pain. They can't sleep at night. They're worried. They're stressed out. Number one cause of divorce is money.
Yeah.
Okay. So definitely the feelings are there. but they don't know who to talk to. That's the other thing. Where do you begin? Or they say, I don't have any money. Who am I going to talk to? What is anyone to talk to me? I don't have any money. That's an easy excuse. Everybody has money. Everybody, it's just what they choose to do with their money that makes all the difference in the world.
How many people that you run into that think they got it all figured out, but when you sit down with them, you're like, "Uh-oh."
Hundreds and hundreds.
Wow.
I had two teachers call me out and said, all I want to do is set up a plan to save through our teacher's account, 403B. And I said, well, before we do that, I want to see where we are overall financial. They say, we're okay. We started figuring everything out. They weren't okay. They were a disaster. And I said, before we even start saving for retirement, we got to fix all this other stuff. You're not ready to save for retirement. And should everyone be saving for retirement? Yes. But until we get all the fundamentals in place, that's kind of the last place we go. Do we need to go there eventually? Absolutely, because they're not going to make it.
Now, a lot of parents are concerned with this. And one of the worst things that I see, not one of the worst, but one of the things that I see is I'm retiring in about 3 years. I'm retiring, and there's hella high water. I'm retiring. I, I see people who are working well into their late 50s, 60s, and above, well, 50s and 60s, because their kid is in college and they want to pay their kids college. To me, that's just crazy. That blows my mind. I'm a different kind of mindset on that. But there are parents who believe that they should be the ones paying the college for their kids. You know, how often do you see that problem, and do you have a solution for that?
Well, if you're going to pay for your kids' college, you should start saving for your kids' college when they are born. And that remedies a lot. But if you're going to pay for your kids' college after they're going to go, it becomes very, very difficult, because we all know what the cost of college is. I know some people that their kids qualify for their student loans, and they get the student loans, and the student loans are being paid by the parents. Well, that's a decision. And I tell you, about maybe 20 to 30% of the people that I meet with that have kids going to college, maybe 20 to 30% are paying. 70-80% they're not, and their kids are incurring debt, and it's a crime. I mean, when you look at what they're charging for tuitions and books, it's crazy. I mean, it's crazy. I mean, people can pay $1,000 for a book that they're going to use for one class, but you can't take the class unless you get the book.
It's the cost of college, I mean, has just gotten ridiculous. I remember, back in the day where you could go to and you're a little older than me, so you probably remember the price a little less, but I remember it was like $33 for a class at the city college, at Sac City College. And I mean, you can get in there, and the book was always going to cost you like $50 or something or more. But I mean, now it's hundreds of dollars for the books,
Yeah.
and then the class, forget it, a couple thousand. And how could you go to class like that? That expense and healthcare has gone through the roof. People are a lot of people are underinsured, and when I'm talking about insured, I'm talking about life or other insurances. Can you talk about that?
Yeah, for the people that do have insurances, most are underinsured. And the reason they are is because they're shopping insurance by premium, whether it be life insurance or even auto insurance. It's sick what they're charging for auto insurance premiums everywhere in the country, but especially here in Texas. I mean, if you own a home, homeowners insurance is ridiculous. The insurance companies they're out of their minds, okay? But everything is fine if nothing goes wrong. But as soon as something goes wrong, that's where you need the insurance. So one, you need to know that your insurance claim is going to be paid. But two, you need to know that you have enough insurance. If it's life insurance, of course, you died. Nobody knows. Who knows your family who's left behind? That's who knows. And, if they're delivered a $50,000 or $100,000 policy, and let's say you're making $50,000, $60,000 a year, well, after they bury you and take care of the bills, there's nothing left. There's no more income coming in. But people don't have this conversation because money, to them, it's hard to process what you actually need. Somebody who's making $50,000 a year actually needs about $600,000 of life insurance, but they don't know that because no one's having that conversation. It sounds like such a big number. It's just like retirement. Somebody says, well, I'm retirement, I have a 401k, or I have this plan with the city, or I have this plan with the county, or whatever the case may be. They think they have enough money. Okay. Well, $1 million at retirement equals $50,000 a year in income. So no, they're always underestimating how much they're actually going to be needing in order to retire, always underestimating what they think they need in insurance. And how many people out there have no insurance of any kind? They have no health insurance, they have no auto insurance, they have no life insurance, they have no insurance of any kind. And they don't know really what would happen if something went wrong in any of those areas. And so it's so critical to have the discussion. And I know it's hard if you're spending 100% of your paycheck. It's even harder when you're spending 120% of your paycheck. You see?
Yeah, that's those credit cards.
Yes.
So if somebody is interested, or they want to talk to you, how can they get a hold of you?
Well, one, they could call me. Okay. I can be easily reached. My office number is 469-732-8890. They also can reach out to me through the Red Oak Area Chamber of Commerce. I'm currently the chair of the Red Oak Area Chamber of Commerce. So you can call they can connect with me right there. I've had people do that already, believe it or not, here in the community that have reached out. People will find me. You'll find me on the social media, on Waxahachie Buzz, and you'll find me in Midlothian, and you'll find me in Red Oak Talk. You can find me. I'm there quite a bit, so I do have opinions, and I do express my opinions. That's for sure.
Yeah. I got that. I definitely got that issue. I understand that. On my show, I give my guests the last word. So Mike's yours.
Well, all I can say is, first, I'm thankful to be here, DV. Thank you so much for having me. People need to hear this. People need to know that there is help out there if they reach out. I don't charge a fee to come out and help someone. And it's like, why wouldn't you even take the time? We can get on a Zoom call, take 30 minutes. We have a technology that in 10 minutes you answer a series of questions. We could see where you're at, get an idea what's important to you. But people just need to know that I'm out there. And I'm sure there's more people like me. I'm sure I'm not the only guy that's out there, but I'm licensed in everything from insurance, life insurance, for loans. I'm a mortgage loan originator, and investments as well. I'm a financial advisor, investment advisor. I have a Series 6, 63, 26, and Series 65 license. So I have all the certifications and licenses. And more importantly, I have over 30 years experience doing this. I've seen everything. So when someone says, Mike, I have no idea. Oh yeah, I do. I've seen it before. They're not unique in any way. So I just look forward to having the ability to help more people here in the community.
Well, I appreciate you coming on again. Can you stick around real quick after the show?
Sure, absolutely.
Thank you.